the whole host of managements that we have on the show today. Let's welcome on board Mr. H.P. Singh, the CMD at Satin Creditcare Network, joining us on the show. Mr. Singh, good morning and thanks for your time. Talk to us about the microfinance space right now. It's in a mid-cycle consolidation phase. How do you see competitive intensity evolving, especially with banks and small finance banks pushing deeper into rural credit?
So I think, what has happened now for microfinance as a sector is that I think the headwinds have died down. The asset quality is now firming up pretty good. The growth is coming back. The green shoots are there. So I think, whatever consolidation or competitiveness probably had to happen has already happened, Our own sense from the ground level is that, there is now growth which has started to trickle in because the asset quality has probably foundered. The first half is normally the income levels probably don't go up as much as it is in the second half of the year. And the first half has been pretty tepid, because of heat waves, monsoon, floods, and the harvesting season, which happens in the rural areas. So our sense is, I think, that whatever had to happen for microfinance has already happened. And now I think we're looking at positive measures and the growth coming back in terms of both asset quality as well as the growth which is going to come back now.
All right, so asset quality, the numbers are expected to do better going ahead. Mr. Singh, hi, morning. This is Shrishti also joining in. But let's talk about your collection trends. How are you seeing the trends shaping up? Help us understand more on that.
See, for us, I've said it earlier in my remarks, to a lot of people that, we brought in guardrails, much before the industry brought in, So for us, the collection efficiencies were really better than. If you look at the credit cost, panning out for the entire industry, I think we did much better than that, Having said that, I think, if I talk about the industry and ourselves in particular, I think, for us, it's getting better and better. In fact, for us, the credit cost, which used to be there for the last year, we are in fact gunning for maybe a decline in the credit cost for this year as compared to what the previous year would have been. The industry is also getting back because if you look at the collection efficiency levels, people are now reporting 99.5 onwards, which used to be, practically lower than 99%, as per last year. So I think, there's a lot of firm up which is happening. The positive, things coming back from the field, I think, that adds up to that. And my sense is that the last half year of this financial year is going to be good,
Okay, so that sounds optimistic. Mr. Singh, also talk to us about any behavioral shifts that you have observed in the borrower base post the stricter guardrails that we've seen. Has that translated to lower ticket size demand, fewer simultaneous borrowings, or on the flip side, are you seeing more responsible credit usage?
I think it's a mix of both, So definitely, yes, I think, since the guardrails have been introduced, there has been a spike in the rejection rates, So when this kind of a spike happens, I think, you're filtering out probably more over-leveraged borrowers, rather than the under-leveraged one. So I think, what you're getting now, borrowers in the system who genuinely need a microfinance loan. I think, it is not related to maybe an over-borrowing strategy. Having said that, I think, for the entire microfinance sector as such, the fact of the matter is that, I think responsible lending used to happen, but I think the fact which is now happening is I think the borrowers also have got back into the same mode as were there. Earlier it was like there was probably an intent because of the income levels not coming up to that level. The intent was pretty evident, that loan was not probably being repaid in the right earnest as such. But I think, once you have probably a deficiency where the microfinance industry has degrown, I think, now it is time for even the borrowers to realize that, I think, for financial inclusion in the rural space, I think, microfinance is probably the best bet.
All right, and lastly, are we seeing any early signs of market saturation in high penetration states, and what are the next under-penetrated clusters with scalable potential as per you?
See, my sense is there is no stagnation as such, or there is what you said, high penetration levels. Even if you go to the highest markets as such, which is the southern markets, you talk about Tamil Nadu and all, over there also the penetrations are closer to about 50-60%, but having said that, 60% still leaves you maybe an opening of 40%. When you do, I'm talking of the entire space of microfinance, so there's still, about 35-40% probably to be done across over there. It'll be challenging though, but it is not that the saturation has happened. But if you go down as compared to states like, even larger states like UP and, I'm talking of states like Northeast and all, where the penetration levels are still, closer to about 15% or so, there's a huge potential across over there. So I think the shift is also happening where people from south are moving towards east as well as north and northeast. Basically, I think that is probably where now microfinance will probably go forward in terms of looking for growth across over there. So my sense is, and as would have said it, I think once your FOIR ratios also go up, it earlier used to be about 1.5 lakhs, was probably the FOIR ratio. Now it's about household income of about 3 lakh of rupees, So as this also inch up, I think, we'll probably be giving in maybe more in the same geography as such. So I think, growth will probably come, but there's no stagnation, and it will follow across over there.
Okay, Mr. Singh, that sounds good. And thank you so much for joining us. With that, we'll let you go. Thanks for sharing your growth outlook with us and our viewers.